Have you ever wondered how real estate investing could change your financial future? Welcome to the fascinating world of property investment. It's a realm where financial dreams can take flight, where passive income can be nurtured, and where a diversified investment portfolio can be grown. Imagine for a moment a world where you're not solely reliant on your 9-to-5 job for income, a world where your money works for you, even while you sleep. This isn't just a fantasy. It's the reality for countless individuals who've stepped into the sphere of real estate investing. When we talk about real estate investing, we're referring to the purchase, ownership, management, rental, or sale of real estate for profit. It's a strategic move that can generate passive income, providing you with a steady stream of earnings without the need for constant active effort. It's like having a tireless worker who's always on the job, contributing to your wealth, day in, day out. But that's not all. Real estate investing can also be a powerful tool for diversification. If you're already invested in the stock market, adding real estate to your portfolio can help spread risk, potentially reducing the impact of market volatility on your overall wealth. It's like wearing a financial safety belt, cushioning you from the bumps and jolts of economic fluctuation. Over time, real estate investing can help build substantial wealth. As property values generally increase over the long term, your investment can grow too. It's like planting a seed today and watching it grow into a money tree over the years. But how do you navigate this world of real estate investing? How can you maximize its potential benefits? What strategies should you adopt? If these questions are tickling your curiosity, you're in the right place. If you're intrigued by the idea of real estate investing, stick around as we dive deeper into how you can get started. Before diving into the real estate market, it's crucial to understand the basics. Imagine real estate as a vast ocean, teeming with different types of fish. Just like fish, real estate properties come in all shapes and sizes, each with its unique appeal and potential for returns. Let's start by discussing the three main types of real estate: residential, commercial, and industrial. Residential real estate is what most of us are familiar with. These are properties where people live, like houses, apartments, townhouses, and condominiums. Residential properties can be a solid investment choice as they provide a steady income stream through rental payments. Next, we have commercial real estate. This category encompasses office buildings, retail stores, restaurants, and other businesses. These properties often yield higher returns, but also come with higher risks and more complex management requirements. Lastly, there's industrial real estate, which includes warehouses, factories, and logistics centers. These properties can offer substantial returns, especially in today's e-commerce-driven world. However, they often require substantial capital and expertise to manage effectively. Now let's switch gears and talk about the different investment strategies. The first one that comes to mind for many is rental properties. This strategy involves buying a property and renting it out to tenants, providing a regular income stream. Then there's real estate investment trusts, or REITs. These are companies that own and operate income-producing real estate. By investing in a REIT, you can gain exposure to real estate without the need to own, manage, or finance properties yourself. Lastly, we have flipping houses. This strategy involves buying a property, improving it, and selling it at a profit. While potentially lucrative, this strategy also carries significant risks and requires a keen eye for value and the ability to manage renovations. With a solid grasp of these basics, you're well on your way to becoming a savvy real estate investor. So, whether you're drawn to the steady income of rental properties, the hands-off approach of REITs, or the thrill of flipping houses, understanding these fundamentals is your first step towards navigating the exciting sea of real estate investing. The foundation of successful real estate investing lies in choosing the right property. Selecting a suitable property for investment isn't a decision to be made lightly. It demands careful consideration of several factors. Let's delve into some of these. Firstly, location is a cardinal rule in real estate. An excellent location can often override other negative aspects of a property. Consider the proximity to amenities, quietness of the neighborhood, future infrastructure plans, and the area's crime rates. Each of these factors can significantly impact the property's value and desirability. The condition of the property is another critical factor. A property in a dilapidated state may require extensive repairs that could eat into your profits. On the other hand, a well-maintained property may command a higher price, but could potentially offer a better return in the long run. Understanding the market trends is vital as well. Is the property in a locality where the demand is high? Is the market saturated? Or is there room for growth? A sound understanding of the current and predicted market conditions can help you make an informed decision. Now let's talk about the financial metrics. Primarily, you'll want to consider the return on investment. This is the ratio of money gained or lost on an investment relative to the amount of money invested. A higher return on investment indicates a more profitable investment. Other financial considerations include the property's price compared to its market value, the potential rental income, and the costs associated with owning the property, such as taxes, insurance, and maintenance. Lastly, remember to consider your financial goals and risk tolerance. Not every property will align with your investment strategy. Some properties may promise high returns, but come with higher risks, while others may offer steady, but lower returns. Remember, the right property can set the stage for a fruitful investment journey. It's about finding a balance between risk and reward, and ultimately, making a choice that aligns with your investment goals and strategy. Now that you've chosen your property, let's talk about financing it. Financing is a cornerstone of real estate investment. It can be a complex process, but there are a variety of options available, each with its own benefits and potential pitfalls. Let's delve into some of the common methods. A popular choice is securing a mortgage. This involves borrowing money from a bank or other financial institution, using the property as collateral. Mortgages typically require a down payment, often 20% of the property price, and the rest is paid back over time with interest. The advantage here is that the bank shares the risk of your investment. Then we have private lenders, often individuals or companies willing to lend money for real estate investments. They tend to be more flexible than traditional banks, but the interest rates are usually higher. It's essential to establish a clear agreement with any private lender to ensure both parties are protected. A newer option on the scene is real estate crowdfunding. This online platform allows investors to pool their money together to invest in properties. It's a great way to get involved in real estate investment without needing a large amount of capital. Regardless of the method you choose, maintaining a good credit score is crucial. It can significantly impact your ability to secure financing and the terms of any loans you receive. Another important factor is your debt-to-income ratio. This is the amount of your monthly income that goes towards paying off debts. Lenders use this ratio to gauge your ability to manage the payments. A healthy ratio is typically around 30 to 40%. If your ratio is too high, it might be a roadblock in securing financing. Remember, every investment comes with risks, and real estate is no exception. But with careful planning, due diligence, and the right financing, you can mitigate these risks and set yourself up for success. Proper financing can make your real estate dreams a reality. So take the time to understand your options, assess your financial situation, and choose the best financing method for you. Buying the property is just the beginning. Effective management is key to a successful investment. Dive headfirst into the world of real estate management with us, where we'll explore the essentials of property management, including finding and vetting tenants, maintaining the property, and handling legal requirements. First up, let's talk about securing tenants. It's not just about filling your property with bodies. You need reliable tenants who will pay their rent on time and respect your property. To find them, market your property effectively. Highlight its best features and ensure it's priced competitively. Once you've attracted potential tenants, vet them thoroughly. Check their references, employment status, and credit history. Remember, a little diligence now can save you a lot of trouble down the line. Next, let's move on to property maintenance. It's not just about fixing a leaky faucet or a broken doorknob. Maintenance is an ongoing commitment. Regular inspections can help you catch minor issues before they become major headaches. Don't forget to budget for unexpected repairs. A well-maintained property is more attractive to tenants and can help you command a higher rent. Finally, let's tackle the legal requirements. Familiarize yourself with landlord-tenant laws in your area. These can dictate everything from how much you can increase the rent to how and when you can evict a tenant. Make sure your lease agreement is legally sound and clearly spells out the rights and responsibilities of both parties. Consider hiring a lawyer or a property manager to help you navigate the legal complexities. In the end, managing your real estate investment is about more than just collecting rent. It's about protecting your investment, maximizing your returns, and maintaining a positive relationship with your tenants. If you can master these aspects of property management, you'll be well on your way to turning your investment into a profitable venture. Effective management can turn your investment into a steady source of income. So let's roll up our sleeves and get to work on making your real estate investment the best it can be. Like any investment, real estate comes with its own set of risks. But don't worry, we've got you covered. Today we're going to tackle the potential risks in real estate investing and how you can mitigate them. Let's start with market volatility. Real estate markets can fluctuate due to various factors such as economic conditions, interest rates, and government policies. To navigate this, it's essential to conduct thorough research and stay informed about market trends. Knowledge, as they say, is power. Next, let's talk about property damage. Whether it's a natural disaster or a troublesome tenant, property damage can put a significant dent in your investment returns. So, how can you protect yourself from this risk? The answer is insurance. Ensure you have comprehensive property insurance that covers all potential damages. It's also a good idea to have a contingency fund for unexpected repairs. Now let's move on to vacancies. A vacant property means no rental income, which can significantly impact your cash flow. To mitigate this risk, you need to understand your target rental market. What do potential tenants want? What are the rental rates in the area? This understanding can help you make your property more appealing and reduce the likelihood of long-term vacancies. Another risk is dealing with legal issues. These can range from zoning restrictions to tenant disputes. To mitigate legal risks, familiarize yourself with local laws and regulations. Consider consulting with a real estate attorney to ensure you're on the right side of the law. Lastly, remember that diversification is key to mitigating risk in any investment. Don't put all your eggs in one basket. Consider investing in different types of properties or in different locations. This way, if one investment underperforms, your overall portfolio won't take a massive hit. As we wrap up, remember that while risks are inherent in real estate investing, they can be effectively managed with the right strategies. Proper research, comprehensive insurance, understanding your market, legal compliance, and diversification are your best weapons against potential risks. Risk management is the linchpin of any successful investment strategy. Let's recap what we've learned about getting started with real estate investing. We began our journey by introducing the fascinating world of real estate investing, revealing its potential for wealth creation and financial freedom. We then delved into the basics, highlighting the importance of understanding the ins and outs of the property market. Remember, knowledge is power, and in the realm of real estate, it's the foundation of every successful investment. Next, we discussed how to choose the right property. The golden rule: location, location, location. It's vital to consider factors such as proximity to amenities, the quality of the neighborhood, and the potential for future growth. But remember, no two properties are the same, and each one requires a unique approach. Financing your real estate investment was our next stop. We explored various options, from traditional bank loans to more creative financing methods. We stressed the importance of having a solid financial plan in place and cautioned against over-leveraging. In our fifth scene, we tackled the management of your real estate investment. We emphasized the significance of regular maintenance, tenant relationships, and effective property management. The key takeaway? A well-managed property is a profitable one. Finally, we addressed risk mitigation. Investing in real estate is not without its risks, but with careful planning, thorough research, and strategic decision-making, these risks can be significantly reduced. In essence, real estate investing is a journey, not a destination. It requires patience, persistence, and a willingness to learn. It's about understanding the market, making informed decisions, and managing your investments effectively. But above all, it's about taking that first step. With these insights, you're now ready to embark on your real estate investment journey. Remember, every successful investor started just where you are now. Here's to your success.